Let's be real for a second. Most people think crypto is just about prices. Charts going up, charts going down. But what just happened with Solana isn't really about price. It's about power. Because quietly, while everyone was distracted, Solana may have just positioned itself as one of the most important blockchains in the entire financial system, and almost nobody is talking about it. The shift no one saw coming. So here's what happened. US regulators, the SEC and CFTC, introduced a new framework to classify crypto assets. And within that system, Solana was officially categorized as a digital commodity, placing it in the same category as Bitcoin and Ethereum. Now, that might not sound exciting at first, but it's actually a huge deal. Because this means Solana is not being treated like a security. And in crypto, that changes everything. It removes a massive layer of uncertainty for investors, developers, and institutions, and it opens the door for serious capital to enter the ecosystem. For the first time, regulators are moving towards structuring crypto instead of simply resisting it, creating clearer categories like digital commodities, stablecoins, and digital securities. Why this matters for big money? And when something becomes clear, big money gets comfortable. When big money gets comfortable, it moves. This classification signals to institutions that Solana is closer to Bitcoin than to risky, unregulated tokens. That affects how exchanges list it, how funds invest in it, and how companies decide to build on it. But what makes this even more interesting is what Solana has been building in the background. The hidden weapon. Why Solana is built different. Here's what most people are missing. Solana isn't just hype, it's built differently. It uses something called proof of history, which basically allows it to process transactions extremely fast and at very low cost. We're talking thousands of transactions per second with fees that are almost nothing. And when you're dealing with real-world finance, payments, assets, global users, that speed actually matters. Because in real finance, slow systems don't survive. And this is where Solana is quietly pulling ahead. The rise of real-world assets, RWA. While most people were focused on meme coins and short-term hype, Solana has been pushing into something much bigger, real-world assets, also known as RWAs. This is where traditional financial assets like real estate, government bonds, commodities, and private credit are turned into digital assets on the blockchain. In simple terms, it's about bringing the real financial world on-chain. And right now, Solana is starting to gain serious momentum in this space. In fact, for the first time ever, Solana has surpassed Ethereum in certain RWA adoption metrics, including the number of wallets holding tokenized real-world assets. Solana versus Ethereum, the quiet takeover. That's a big shift. Ethereum built the foundation for smart contracts, but Solana is optimizing for speed, low fees, and scalability, all of which matter when you're dealing with real financial systems. It's becoming increasingly attractive for payments, stablecoins, and high-volume applications. At one point, Solana processed hundreds of billions of dollars in stablecoin volume within a single month, showing that this isn't just speculation, it's real usage. What makes this even more important is how quickly the balance of power is shifting. Ethereum built the foundation, but dominance doesn't last forever, especially when a faster alternative gains traction. Solana is competing on performance, lower fees, faster speeds, and better scalability. That means better user experience and real potential for global adoption. This isn't about replacing Ethereum overnight. It's about the market expanding and Solana taking a bigger share. What this means for you. So what does all of this mean for you? If you're Gen Z or a millennial, you're still early. Not early like Bitcoin in 2012, but early in terms of real-world adoption. What we're seeing right now is the shift from crypto being purely speculative to becoming actual financial infrastructure, and Solana is positioning itself right at the center of that transition. The reality check. But let's keep things realistic. This doesn't mean prices will go straight up, and it definitely doesn't remove risk. Crypto is still volatile, narratives change quickly, and competition is growing fast. Regulation can help the market mature, but it can also evolve in unpredictable ways. So no, this isn't guaranteed success, but it is a strong signal. The future of finance. A signal that institutions are paying attention, governments are adapting, and blockchain technology is starting to move beyond hype into real-world use cases. If this trend continues, we could be looking at a future where assets like stocks, real estate, and bonds exist on blockchain networks with 24/7 markets, instant settlement, and global access. And platforms like Solana could become part of the backbone of that system. So this isn't just about Solana, and it's not just about crypto. It's about the next evolution of finance. And the real question is, will you understand it early, or wait until it's already everywhere? If this helped you understand what's actually happening behind the headlines, make sure to like, subscribe, and let me know in the comments, are you paying attention to Solana or still sleeping on it?